Hello, heyo, and hello, every fucking buddy out there. Today, I'm going to be going over the Nasdaq price action and how you could have absolutely banked out on the Nasdaq today, trading funds, trading options, trading live stocks, whatever it is. Basically, I'm going to show you how I did today and how you can too, and how these days you need to be running and not walking. It is not a marathon today; it was a sprint, and I'll show you exactly why, and I'll break it down as simple as possible. As always, I have a Discord in the description down below. You could join that. I have an Instagram. You can go ahead and watch those videos. Whatever it is, you can talk to me. You can comment. You can join my Discord, and I'll explain it further. I love talking about trading, so let's get into it. Basically, first we got to start on the daily time frame. Okay, the daily time frame. Last few days, 2,887 points in a pump, okay? In the absolute pumpage of doom and despair, okay? Basically, we tapped into 50% of this huge, massive range on the monthly. I'll go ahead and show you on the monthly. On the monthly, we tapped into a monthly fair value gap, right? And on the weekly, we came down, we have rejection, and we're seeing the week to go higher, right? Now, on the daily, we have a 2,800 point move. So we're not going to fade this 2,800 point move. We're going to be looking for longs, right? Shorts are going to be less probable. Longs are going to play towards a longer distance. It's just how it is. I don't make the rules. That's just how it is. S&P 500 is at all-time highs. We're not going to be fading the longs. If long setups come, we are going to be taking them. Okay. Now that we got that out of the way. Now, we're going to look at the daily chart. We're going to mark out an inversion. Okay. We're going to mark out this inversion. Now, I don't frame my bias off of inversions, but what happens on a lower time frame chart is going to happen on a higher time frame chart. Whenever we catch an inversion, okay, and we come down and have an overlapping, this is kind of like a BPR, I guess. This like BPR style gap where we have two gaps, an inversion and an actual fair value gap together, we can expect some type of reaction on the lower time frames, but also on the higher time frames, right? So the higher time frame comes down and we tap into this and we end up taking trades to the upside. Okay, I'll get more into it, but this kind of shows us that we are pushing higher. We just need to rebalance just a little bit. Now, we're not going to fade. We're not going to look for a deep retracement because if we get a deep retracement, we're just going to go to zero. It's not going to happen. I'm sorry to tell you, we're not going to get a deep retracement, but if you look at the 4-hour time frame, we have from yesterday, we have this massive, massive gap. Or from 2 days ago, we have this massive gap that was created on the 4-hour, right? We have the midpoint over here. And I saw some people saying that, we have a gap down here, but it was already mitigated right here. And we do not want to be taking this whole range, in my opinion. Okay, my opinion, you don't want to be taking the whole range of this if to check your Fibonacci because of the fact that we already mitigated this gap down here. So assuming we don't come down up from here to down there and fucking knife through everything, this low doesn't really matter. So basically what I'm saying is it's a swing low to a swing high right here. And what that looks like is 0.618 is in between these gaps. And as you can see, that's OT of the range. If you don't know that confluence basically is just a retracement. It's like a visual representation of a discount. Okay, there's discounts and premiums. If you don't know that yet, you're probably not deep into the trading space because that's kind of important. We want to basically come down and take longs into we want to come down into a discount to take longs to the highs, right? If our bias is longs, we want to see a discounted, entry, and that's how you get your best entries that allow you to hold for longer and make way more money. Now, okay, we're on the 4-hour time frame. Our time frame is bullish. Okay, that's how we're going through this, right? We're 3 minutes into the video, and I'm basically haven't even touched the fucking 1 minute chart yet. Okay, our bias is bullish. Now we're going the 15-minute time frame, and we're gonna mark out. Obviously, this is not like how you would do it when you're trading, but when I'm explaining this, but basically the day opens here 6 p.m. Okay, I'm gonna mark that out just to show you this is where the day opens, and then 9:30 is when the New York Stock Exchange opens, right? So what are we doing overnight? We are creating this trend line liquidity. Okay, we're basically, if you know Tory trades or you know trend lines, okay, if the way they trade is, every time we come and retest this, we're gonna take shorts, we're gonna take shorts, we're gonna take shorts, we're gonna take shorts. Well, what ends up happening is these trend lines eventually break. Okay, when these trend lines eventually break, we get a speed delivery. Okay, so what we want to see is trendline liquidity where our target is going to be, and we want to see rejection wicks and no trendline liquidity where our stop loss is going to be. Okay, so as simple as that is. Now we're going to look at market open. Okay, so we know there's this trendline liquidity. What else is there? There's a 4-hour gap right here. Okay, there's a trendline liquidity leading up to 2 4-hour gaps right here. Okay, now there's a lot. Okay, there's a lot to take in, and this is why this trade and today was one of the greatest fucking days of all time. Okay, so I sound crazy saying this, but so trendline liquidity. Okay, market opens at 9:30. What are we doing at 9:30? Okay, we're coming down. We're tapping into the 0.618 of the range that I drew earlier, that Fibonacci. Okay, we're tapping into that, and we're getting a reaction. Okay, if we just knife through this, completely knife through it, okay, then I can see a world where either it's a no trading day or we just gotta let price develop. But what ends up happening is we get a 30-minute market open power of 3. So what is a power of 3? A power of 3, I'll go more into this in another video if anybody wants to see it. Okay, just comment down below or message me in the Discord. Power of 3 is one of the main confluences I use. Basically, it works with accumulation, manipulation, distribution. It's just the idea of trying to get in at a bottom or top wick of a new candle opening, right? So the 9:30 candle, okay, the 30-minute 9:30 candle is one of the most important candles of the day, okay? Basically, if we look at it, where did the 9:30 candle open up? The 9:30 candle opened up down here, okay? So I'm going to mark that out for you. Do you think we're going to just slice through everything, okay, without seeing any type of upside? I'm sorry, I make assumptions, okay? Trading is assumptions. I trade discretionarily. I don't think so. Okay, I don't think so. You might think so. I don't think so. Okay, and that's how I trade. So 9:30 opens up. Okay, not only do we have 9:30 opening up here, right? I'm gonna mark this out for you. 9:30 power of 3. Okay, I'm gonna mark it like this for you, so you can visually see it. We have a 9:30 wick. 9:30 wicks are really important draws on liquidity. 9:30 wicks act. So 9:30 candle is. So the 9:30 1-minute candle is basically the most traded candle by far out of any of the candles traded at any point in the day. Okay, there's like 4, 5, 6,000 contracts getting traded at that point of the day. So the high and the lows are act as if they become swing highs or swing lows, they act as magnets. Okay, so it's good for us to see that the 9:30 high, okay, 9:30 high is going to be above us. Okay, so we're coming down, right? 9:30 opens, we come down. Okay, we create the bottom wick. What are we doing? We're creating the bottom wick. We're sweeping the liquidity. We're sweeping the liquidity here, and we are basically gonna get a reaction. And when we get this reaction, okay, we're not gonna just guess and just bottom tick the short, the long, which you possibly could do, and I've done it before. But you are basically waiting for some type of reaction. And when like an easy way as a beginner to see a reaction is this huge displacement candle, right? We're getting 70 points, okay, to the upside. Okay, after tapping to the OT of the higher time frame range, etc., with low resistance liquidity. If you close your eyes and just tap buy, like you've done it correctly, because now you're assuming that your entry, okay, you're assuming that your entry is going to be, or your stop loss. Let's just talk about stop loss right now. Where you're assuming that your stop loss, you can put it here or at the swing low, whatever you want, whatever makes you feel comfortable. You are assuming that your stop loss is going to be the bottom wick of a 30-minute candle. Now, why is that important? Because if we are at the bottom wick of a 30-minute candle, we are not going to get stopped out no matter what. Okay, we could have fucking entered up here, had our fucking stop loss all the way down here, entered all the way up here on this fair value gap tap, which obviously is not that good of a trade, and you could have rode all the way to the highs. It doesn't matter because this low is going to hold at least until we start running the trend line liquidity, or at least until like up here somewhere, and by then you would already probably, like up here, you'd probably already be break even. I don't even know. Okay, now I don't think it was smart to go break even today, and I'll explain to that why. Today is an exceptional day. We have everything aligning with conditions, with low resistance liquidity, with targets and stop loss and manipulation of market open. Today's a day you don't go break even, okay? Because in the event that you entered here off this inversion, your stops at this low or your stops at the body, if we fail here, if we come up, tap this, and you go break even, and then we end up coming back down, okay? We end up coming back down, tapping into this gap, and you're break even, and you get stopped out for break even, your trade idea is not wrong. So there's no reason to go break even. That's a mechanical way to trade. Now, sometimes you have to go break even on some of these trades, but when the context is aligning this perfectly, never go break even, because if the trade taps this line and comes down to retest this gap and it taps you out for break even, you are going to FOMO, you're going to blow an account, you're going to miss a great trade. Okay, that's one thing. Now, you could have entered right here, stops below the low. You will have a crazy confluence. You have inversion right here. You have a BPR. You have the 9:30 power of 3. It's going to hold. Like this is a trade. Like, how do I explain this? This is a trade where you can close your eyes, press longs, put everything on the line, and it'll hit 9.9 out of 10. Okay, and that is a great return. Okay, now don't full put your accounts on these types of trades, but you know what I mean. Yeah, and so then I saw people also taking the trade only to a 1-to-1. So like this. This is the worst thing you could do, because when conditions align, narrative aligns, higher time frames align, up to the monthly time frame is aligning with your conditions here, there is absolutely zero reason why you should be taking a 1-to-1 here. And the reason I say that is because if you were a live account trader, a trade like this is one that'll put you so far in the green. Okay, it'll put you so far in the green where you could take 4 losses later and it doesn't even fucking matter. Okay, and that's important because that helps with your win rate, right? Because eventually you're gonna have some losses. Eventually you're gonna have whatever, but this is gonna outweigh the losses, and it'll help you be profitable in the long run. A trade like this is a trade you hold to maximum TP. Okay, a maximum TP here is the low resistance liquidity. Why does it do this? Maximum TP is all the way up here. Okay, but in my opinion, holding it to all the way here is justified because these low resistance highs, low resistance liquidity are together while this one's a little bit further apart. So there's gonna be like, you could see there was resistance here. We came down, then we came to tap it, right? But yeah, if you're taking it to a 1-to-1 right here, that's pretty bad in my opinion, and you need to hold it all the way up to here. So I ended up doing this. I didn't need it on my funded accounts, so I actually closed the trade early because I needed to pass lucid accounts, and then I needed a winning day on my Tradeify accounts, which I ended up getting, right? But I took it on options and I held it all the way up. I held it all the way up to the 4-hour gap, right? And there's a little bit of like annoying fucking drawdown here. It doesn't matter, but what I'm trying to say is you took a 1-to-1 R trade, but it was a 1-to-4 R trade when the stars literally aligned. It's not good for you in the long run. Now I'm not saying you should be holding 1-to-4 RR if you're a 1-to-1 trader or whatever type of fucking trading you do all the time. But I'm saying when stars align and when conditions are right, especially when you look at the daily time frame, I can understand not holding to 1-to-4 or whatever it is on this type of chop. But when we clearly are coming down and then come higher, and then we're in a daily fair value, and then we're clearly going higher with low resistance liquidity, do not be holding to a fucking 1-to-1. It's just stupid. I'd rather you lose this trade than you just take out a 1-to-1 or get break even. I'd rather you absolutely lose the trade because then the trade idea was wrong. Okay. Yeah, and that's what I'm saying. Go ahead and follow me on Instagram. Go ahead and join my Discord. I love talking about trading. You can comment in the description down below, and I'll be talking about more trading stuff. If you have questions, join Discord, comments, Instagram, whatever it is, I'm there. I'll talk to you. All right, I love this shit. I love this shit all the time. If my recap or explanation wasn't that good, I'm sorry. I'll get better at it. I don't really do this type of stuff on YouTube, but I'm gonna start doing it because I'm just so passionate about this shit, and I think a lot of people can benefit from um, my understanding of this stuff. And as I get better, I'll get better explaining. And yeah, pretty much kind of like documenting my journey, but also kind of educating as well because I'm a person who has gotten $15,000 payouts multiple times. Has like, anyways, I'm not gonna go into my achievements, but I'm definitely top 1% of traders, and I think I can give some type of information to you guys, especially beginners or people who are just a little bit better. And yeah, peace out, boys. Thank you for watching, and join Discord and do all that stuff. I'll see you guys.